Two insurance companies are asking the state if they could raise property insurance rates. And there's also now a new push to give homeowners a tax break. Rate hikes have plagued our state, as we've been reporting for months and months. Many homeowners are receiving notices that your policies are being canceled or that the price to insure your home is going up, in some cases way up. Mark Friedlander is with the Insurance Information Institute and has been following these latest developments at the state capitol, the hearings in the last 2 days for the rate increase and the new tax cut proposal as well. He's joining us live this morning via Zoom. Good morning. Thanks for being with us.
Thanks so much for having me today.
So let's start first with the request by two companies. It's Castle Key and Amica Mutual to raise rates. How much of an increase are we talking about here and why?
So for both companies, Castle Key and Amica Mutual, we're talking about rate average increase over 50%. And in the state of Florida, any increase over 15% automatically triggers a public hearing. And that's why we had the two hearings this week.
And I want to make sure I understand you. They're asking for a rate increase of 15%, 1-5?
No, both over 50%,
Wow.
50. Yeah, 15% is the trigger for a hearing, but these are both averaging over 50%.
So there have been hearings the last 2 days. What has been the resolution?
Well, this is really just the first step in a process. There is a public comment period through March 8th, and then the regulator will act on these. But an important point here is both of these increases have already been implemented. There is a process in Florida and many other states called use and file, where insurance companies can implement the rate changes and then retroactively have a hearing. And if for some reason the regulator says, we don't agree with your rate increase, adjustments could be made. But these actually took place last year. So most of the impacted customers for both companies have already seen these rate increases.
Was a reason given as to why?
Well, really, the key factor is storm losses. Many of the losses that we've seen, of course, are related to hurricanes. And since these rate increases were both implemented last year, that was based on 2022 data. And of course, we have to remember 2022 is when Hurricane Ian struck Florida, one of the worst storm losses in U.S. insurance history, over $50 billion in losses for the insurance industry. So you have storm losses, you have replacement costs up 55% cumulatively over the past 4 years. You have reinsurance costs, which are running about 40 to 100% based on last year's data. So you have a lot of factors driving rate increases, not only in Florida, but in other coastal states right now.
So it's interesting. We had an insurance agent on last week talking about these rate increases, and he really seemed to think that things would start to level out. You know, we did not last year have as active as a hurricane season. 6 new insurance companies have kind of started writing in the market. Do you think that there's going to be some kind of leveling out based on what you're hearing? Well,
the good news is the regulator indicates that recent rate requests have been much lower, well below that 15% threshold. So once again, just reminding everyone, these rate increases were implemented last year. Recent rate increases over the past, say, 4 to 6 months have been well below 15%, many in single digits. So we are seeing a positive trend with much lower rate increases than we have in the past. The signs are very positive.
I want to pivot, if we could, too, because this just happened this week with the Senate and lawmakers in general, even the governor. I mean, they've all acknowledged that we're in a real property insurance crisis here. And there is now this push for a tax cut. Would you explain what is being proposed?
So the proposal, which was in the Senate budget proposal that was put forward at the beginning of this week, is for cuts on certain taxes and fees on both home insurance and flood insurance bills. And we broke it down here at the Insurance Information Institute and analyzed based on a $6,000 average premium in Florida for home insurance. The savings would run about $231 on a home insurance bill. For a flood insurance bill, which averages roughly $985 in Florida, we're talking about only $17.23 in savings. Not a lot of savings, but the way we look at it is any savings is good. Any way you could trim the cost of your insurance today is positive in our opinion.
Okay, well, I know that it was proposed in the Senate. There is a version in the House. Is there any indication as to whether or not this will get full traction and something that we'll eventually end up seeing made into law?
At this stage, we really don't know. The House had some concerns about the tax cuts, what that would do for state budgets, things of that nature. So I know they're going to have to work this out, negotiate, which is typical when you have different versions of bills. We'll see if it plays out, but certainly it would be a benefit for Florida homeowners if there are some cuts made through the tax process this year.
As you mentioned, any little bit helped, I suppose. Mark Friedlander with the Insurance Information Institute joining us this morning. We appreciate your time.
Thanks for having me.